Hello, my name is John Dudek, and I'm Vice President of Sales for LKCS. Thank you very much for taking time to attend our webinar on credit-based marketing. We will cover what credit-based marketing is and why it would be very important for you to utilize it. First of all, two big questions are you losing loans? And the loans you are getting, are they the right loans? Well, we'll work and try and help you answer these questions. On average, 5% of your customers are looking for a loan every month, whether it's auto, mortgage, HELOC, or credit card. Competition is fiercer than ever, and you need to gain the knowledge and ability to close loans from your customers when they are looking to close them. You need to make the right offer at just the right time, and LKCS can assist you with these needs. But first of all, I want to give you a brief overview of who LKCS is. Our company was founded over 50 years ago with a credit union loan. Our niche is financial institutions. We work with over 400 clients, and important, we are not a data company, but we're a marketing organization specializing in the delivery of products and services for our clients. And that's very important because we are not here just to sell you data and move on. We have a lot of different marketing services that you can utilize and that we want to let you know about and hopefully get you to use them. So I wanted to go over this chart, which is basically a brief overview of who we are and what we do. And we'll start at the bottom, the green area, programming and technology, and we'll start there because we are a very green company. That is another area that we take pride in. And at the top of it is security. We are SOC 2 certified. Security is a very big issue with us and especially with our clients. We handle a lot of sensitive data, and we do the best we can to keep it as secure as it possibly can be. We just recently received our audit for 2013, and I'm proud to say we passed with flying colors. If you move on to the blue section, multi-channel marketing, we work with our clients, and we can get their services and products out to their prospects, and we can do it with commercial printing. We can do it with electronic services. We do statement marketing and web, so we can deliver your services, your products out to your prospects and your customers in any way, shape, or form. And one-to-one marketing is very important to us. And with the credit-based marketing, it's one-to-one marketing where you are personalizing everything you send out. You are making offers specifically to individuals, and the offers can be different. And we segment and target. We data mine. We have our programmers look into the data that we do get, and we use it to the best of our ability to make the best offer we can for the organizations we work with. And then we have a great product called DataFlex. It's a version of an MCIF, and that helps you to track your campaigns and manage them and see how they grow and what you can do to make them even work better. All this data that we gather, the way we get it is we purchase actual data from all three bureaus. And it's very important to work with all three bureaus. LKCS has this relationship, and we've developed it to do it, so it's kind of a unique situation. And the reason it's important to work with all three is not one single bureau has all the information on all the people. You need to use all three to gather that information. And by doing that, you can get up to a 70% increase in the leads that you can get from that data versus just using the one bureau. And working with all three, there is no additional cost from LKCS to do this. Here is the information that we get and kind of how we gather all of it. And if you look in the center, we get information from 215 million consumers, 1,100 different data points. And the 180,000 consumers and the 700,000 daily triggers, this is the information that we actually purchase and get from the three bureaus, TransUnion, Equifax, and Experian. The information for demographic information, that comes from Axion, which is a division of TransUnion. The homeowner information, that comes from public records, mostly county records, which has all the information on homes and people and renting and things and so forth. The auto information, that comes from dealerships, auto repair shops, any auto parts place working with them, and that's how we gather that information. For home values, loan to value, we use the hedonic index. And then for other types of information that would be good to use, persistent responders, this information comes from magazine subscriptions, surveys, and a couple other different things. So this is how we gather all this information and we use it and help you get new, better loans that way. I'd mentioned that it's important to use all three of the bureaus. And before I say that, when we do use all three, you can select which of the bureaus you want to put in the first position, which one you might feel most comfortable with or you've had more success with in the past. Chances are you're working with one of them. And if you are, that could be in the first position. Then the one that you like next could be in the second position. And if there's one you're not too crazy about or have had good luck with, that would be in the third. That way, when you get your information, it's, I guess, in the way that you would feel most comfortable with. And on this chart, it shows by using two bureaus versus one, you can get up to a 42% increase in leads. And utilizing all three of the bureaus, you then get up to a 70% increase in the amount of leads, the amount of good, solid leads that you would be looking for to market your loans. We're going to talk about two different types of credit-based marketing. We're going to talk about prospecting, and we're going to talk about credit alerting and the differences in them. First, credit prospecting. With credit prospecting, your credit data is used proactively. We're marketing to prospects and existing account holders with specific demographic and other credit-based traits being used. With credit alerting, you're using credit data reactively. We're going to market to these prospects and existing account holders actively seeking a loan somewhere else. So we're going to try and stop them from going somewhere else. So how do we use this data? We specify your lending guidelines. When you do this, you only market to the prospects and account holders that meet the specific criteria that you're looking to do. You can pick the FICO score you want, the loan to value, credit history. There's a lot of different variables, and you pick and select exactly which ones fit your criteria to go with these clients. What you also do is specify your lending guidelines. You only market to the prospects and the account holders that you target and want to market to. And the way you do this is by coming up with the criteria that you feel fits your credit union or bank. You use the FICO score, we get that information, the loan to value, credit history, and other variables. And then once you've done this, you have to make an offer. It's very important to make a firm offer of credit. And what this is credit data can only be used when you are extending credit offers, and this is something we'll talk about a little bit later, and you must be compliant with the Fair Credit Reporting Act, and LKCS can help you with this. When using credit bureau data, marketing materials must include a few things. Indications that the recipient is either pre-selected or pre-approved or pre-screened. There has to be terms and conditions for the eligibility requirements. And also, we have to include why they may not be extended credit. If there's a reason something comes up that they can't be, that information has to be on there. Also, there's a minimum dollar amount for which the recipient is qualified for. So there has to be a minimum. There isn't a maximum, but there is a minimum for the people that you are marketing to. And there has to be an opt-out notice and a disclosure. So first, let's talk about member retention and cross-selling, and that's through the credit alerting. Basically, what we're doing is we're going to react with the right offer at the right time to your members. We're going to gain the ability to reach account holders who may be defecting to your competition, and you may not even know that it's happening. And this is based on actual credit bureau data. You deliver then a firm offer of credit, and you can cross-sell additional products at the moment a need has been identified. What happens here, how it works, is when your account holder applies for any credit anywhere, an inquiry is posted to his or her credit file. These inquiries are categorized according to the type of financial product that they're looking for, whether it's a mortgage, HELOC, auto, installment loan, or credit card. And your account holder database is cross-referenced daily. And this is the important thing, that it is being monitored daily. We're looking at them. We're looking to see if they're going after loans. And once we find a match there that meets the criteria that you have, then you have a good solid lead. And then once you have these leads, you have to respond then with that firm offer of credit or insurance immediately after receiving the lead. Then you can select which categories of inquiries you wish to target. You could just go after mortgage or HELOC. You can go after auto refi, or credit cards, or you can go after all of them. The leads are then pre-screened using the criteria that we had talked about. Then you get daily credit alerts from all three of the bureaus. And LKCS provides you with a list of all these leads and fulfills any direct mail or email offers that you may have, and we can do that for you on the same day. And you get all these leads in one file. Or if you wanted to just get a list of those leads, we can do that, and we can send those to you, and you could have if you have a call center, call and contact them immediately with the offers that you have. We provide credit-based activity alerts from all three of the major bureaus. And what this does for you, basically what the alerting product does, is it closes loans that could have gone to other lenders by comparing the credit bureau activity and monitoring it each and every day. So you are looking out and making sure that you're getting the loans that you want. We monitor and identify your account holders daily, for all the auto, mortgage, and credit card loans. And again, you set that criteria for which we do that with. You then can send a direct mail piece, an email, or a statement answer to these members, and you can have it checked and have pre-screened criteria on it. And this is something that LKCS can help you with. Or as I said earlier, we can provide you with a list for outbound calls for your call center to call these members. Now we'll kind of switch gears a little bit and get into the prospecting side of it, and talk a little bit about member acquisition, which is two things credit unions want are new members and new loans, and usually they want new members that are giving them good loans. So this definitely helps do that. Basically, it's available for any of this pre-screen marketing campaigns that you want to do, whether it has to do with auto loans, with the auto refi, mortgages, HELOCs, the refinancing, or credit cards. And you can pre-screen your existing account holders to do this, or you can reach out and get credit qualified prospects on this list to do it. You can extend pre-approved offers of credit to the account holders and non-account holders based on the actual credit information that you get. Once again, you set that criteria for the FICO scores, whether there's any delinquencies, and we put that together. You then can send a direct mail piece, an email, or you can have it on the statements. If you're an account of LKCS, we have a number of them that will, on their statements, have a message on there contacting these people for doing that. Or you can utilize our DataFlex reporting engine to measure the results of these campaigns. So I want to talk briefly a little about DataFlex, our document solutions reporting. DataFlex is an advanced financial marketing reporting and tracking system. It's similar to an MCIF, and you can use the power of DataFlex reports to measure the results of your pre-screened and credit alerting efforts. LKCS will incorporate any credit-based data you utilize into DataFlex to track these individual campaigns. And you can use DataFlex to cross-sell other opportunities using your core processing system. It doesn't matter what core processing system you have, DataFlex works with all of them, and it works very easily. We have a couple samples here of a dashboard and a report that
comes with DataFlex. And again, they can all be customizable. We have many dashboards and we have many reports, and I'm not going to go into DataFlex, much more here, but if it's something that you're interested in, we can definitely set up a webinar. You can contact myself or your sales rep, and we can do a DataFlex webinar for you on that. So how can you leverage the credit data to generate these loans? What can you do? How do you do it? We've got some examples here that we have done with some of our current clients, and basically you can be as creative as you can. You can brainstorm. You decide. You select the criteria on what you want to do and how you want to do it. We can help you in those parameters, and we've got the marketing people to help assist and come up with ideas for you to do that. So we've come up with a couple that we've done, and we wanted to go over those with you. So let's say what you're looking for right now are auto refis. So what types could you do? Well, one of them is lease expirations. So we can come up with that where we're looking for a FICO score of 640. We want to exclude any lates or repos, and we want to contact anybody with a lease that's coming due in the next 1 to 3 months. The reason we're doing this is, well, they need a vehicle in 3 months, so whether they buy out the lease, look for a new vehicle, or get a new lease, you can be there to contact them, help them, and get them a loan. Or you can contact for a loan payoff. Again, we picked a FICO score of 640. You can decide whichever FICO score you want to. Again, excluding all lates and repos. And we said, okay, let's look for a balance of over $5,000 left on the loan, so there's a little bit of money still out there. Or the other unique thing that we can do at LKCS is we can figure out what they're very close to what their monthly payment is, and then we will only contact people that have where we can save them at least $25 monthly on their loan. So if your rate's better or it's a little longer, as long as it's saving them $25 or more, we'll contact them. If it's saving them less, why waste your money to do that? So we're very flexible in what we can do. Other type of promos we could do is for mortgages and refis. For instance, let's say somebody wants to do a HELOC and you want it in the first position and you want a FICO score of over 680. Say we'll select a mortgage balance of $150,000 and then less than 50% on LTV and no lates in the last 12 months. Or you can go with a conventional, same thing, FICO score of over 680, mortgage balance of $100,000 or more, no FHA or reverse mortgages, and we only want to target loans that are out there 1 to 6 years and up to 95% loan to value. Now again, we just picked these, so you can pick whichever criteria you want, but we're just kind of showing you some examples. We also can do loans for HARP and FHA streamlines. We have a number of clients into that market, and they're working very well for them. Now into the prospecting side of it, I want to show you a couple things that you can do. And basically with prospecting, there's a minimum of leads monthly, and basically the cost comes out to about 3,000 leads for the month. So setting your criteria, you may decide, okay, I need more leads, I've got to loosen my criteria, or you could just go with less. But so let's say we want to do some offers that have to do with mortgages. So what we can do is have a first-time offer for home buyers, and this is just sent out to renters that qualify by their FICO score and other credit parameters that you set. Then what we can do is, if we don't get enough leads there, go to a revolving debt or reduction offer, which is sent to homeowners, and it's available equity for, let's say, over $30,000 with revolving debt of at least $10,000, again qualified by the FICO and the other credit parameters. And then if we still need more leads and it doesn't hit what we want, we could also run, all three of these programs at the same time, a home equity offer. And this would go to homeowners without a line of credit from your financial institution, again, say with available equity of at least $30,000, again, a FICO score determined by you. And what's nice about this is we can run all three of these at the same time during the month, But doing this, we will suppress each of them against each other, so the same person isn't getting two different types of offers. So now what I'd like to do is just show you how some of our clients do market it. The first one is a mortgage campaign. It's done as a direct mail piece. It's a postcard. It can be an oversized postcard. But first of all, I'd like to say everything is 100% customizable. Everything we do is custom, through our marketing department if you did decide to use us to do this. And this could be used for mortgage, it could be used for auto, and everything on there is selective. You can just select, basically each one may have different amounts that you would be willing to lend them, so we can change that on every one of those. The second one is a personalized letter or a statement cover letter. So this could be a letter sent out, and this is also for a mortgage, which would have the pre-qualified information on it. And if you do work with LKCS and we do your statements, this could be the first page of your statement or your e-statement. And what's nice about that is you are then saving postage. You're not sending it out through the mail. And being that it's with the statements, their chances of looking at it definitely increase because they want to see their statement. So that's another good way to do it. Next example, we can also do the email marketing. So we could send it out, through the e-statement as an email marketing blast, and this could go out, to your list of people, again, as this is a mortgage one, or it could be, auto or whatever you want it to be. But again, and they are all 100% customizable. So you're probably wondering, what's the cost? What do these programs cost? Well, for the credit prospecting, the price depends on several different factors: the number of records purchased, the demographic selections purchased, and then there are the credit bureau minimum charges. So it's with so many people on the webinar, it's hard to really do that. So what you could do is contact myself again, or you could contact your rep, and we could get you that information. And in the meantime, we could also just get you a free list and an estimate of, let's say you wanted to do an auto refi in certain counties or certain zip codes. We could run that list for you, show you how many are out there that match the criteria you have, so that you can decide whether or not it's worth doing it. And the cost for doing the credit alerting, again, it's based on the amount of account holders that you are, or prospects that you are trying to monitor. So it varies, depending on that size. And again, what we can do is offer a free opportunity analysis. We will review your account holder activity over the past 30 days and see how many of your members were out there looking for any type of loans, whether it's HELOC, mortgage, or auto. So we can help you in that area. And again, you can contact your sales rep for that information. And you can find out what kind of ROI you could expect when doing these promotions. The last thing I wanted to do was kind of show you a case study of, basically what type of ROI you could get. And so what we took here was a home equity promotion, and we feel we were very conservative on the numbers that we used. So what we basically did is said, okay, the average size of the loan is $150,000. The front end and back end revenues are 2.5% to 3%. As you can see, there's 3 different levels there, depending on how many members or prospects you're monitoring: 15,000, 50, or 100. We're just going to go over the 15,000 example to kind of show you what it is. So we figured out of the 15,000, 1% of them are going to be looking for a mortgage loan in the last month, which would be a pretty low number, which is 150. And we figured out of those 150, we contacted all of them, but whether it's through email or phone calls or whatever, but you probably had direct conversations with 30% of them. And out of those 30%, you were able to close 10% of them, again, which we think is a low conservative number. So that would be 5 loans that you would have closed that month, and the revenue based on a 2.5% to 3% would be $20,600. The estimated cost for doing the alerting for the month is $1,800. So basically, your revenue per marketing dollar spent is $12 you receive for every dollar you spent. So that's kind of an example of what you can do. We also have a ROI calculator on our website that we're working on, and we're updating that. And when that's done, that's something that you could look at and you could plug in your own numbers and see. So that is all that I have. Thank you very much. I will be sending a copy of this PowerPoint presentation out to everybody, and it'll also be on the YouTube channel.